It's a bit of an international view for you and the domestic stories that you need to be across. Chris Conway, Head of Research and Trading at Australian Stock Report, live to the minute for you to round out the week. Chris, welcome into the show. We're talking pullbacks, although on today's trade at the very least, it seems as if that thematic has proven awfully short-lived. The resilience and the will to rise trumping any short-term downdraft.
Yeah, for today at least, and albeit a very modest gain today, Carson. I think everyone's holding their breath ahead of tonight's non-farms as they did in the US last night. But yeah, look, in terms of the sell-off that we saw early in the week on Tuesday and Wednesday, I've labelled it as the sell-off that we had to have to steal a line from former Prime Minister Paul Keating. The market rallied very strongly during July. I think we only had 4 down days for the whole month. Bit of a recalibration with the RBA cutting rates again on Tuesday, and everyone looking around and sort of saying, well, things aren't as rosy as perhaps we thought they were if the RBA needs to cut rates to continue to stimulate the economy. Yeah,
the issue though is it seems that we've got awfully short memories because we're relatively off to the races again today. I mean, what was some pause and reflect has all been rather sidelined, hasn't it, or am I missing something?
Oh, well, I guess your definition of off the races is slightly different than mine. I don't think, I mean, what did we finish up today? I haven't even seen the...
Well, about 0.4%, yeah. Well, but that actually is...
A handful of points at best, really off to the races.
It's kind of though, it's by far and away not the worst regional performance. There are others you can lay that blame at. I mean, the Nikkei's got its own issues over, you know, a rising yen. You've got the comp. Well, again, that's no real barometer, but we have come in above both those and New Zealand as well.
Yeah, look, no doubt it's a good result, but I think it's probably driven by the fact that oil prices continued to bounce back overnight, and of course iron ore moved higher as well. It was down during yesterday's afternoon session, circa 3%, and then I think rallied 6% in the overnight session, so that's why we've seen Fortescue up 6%, I think you said earlier today, and BHP up north of 3%. So the materials and the energy stocks fired, and the banks didn't do any real damage. So when you get a scenario like that, that's how you carve out the 0.4% gain. But I wouldn't necessarily hang my hat on it. It's encouraging, but not a particularly strong signal, I wouldn't have thought.
Okay, let's talk about signalling around Tabcorp. Out in the event this week, a 50% decline in its full year net profit. You've seen a clutch of price, no, there were price re-rates, but it was perhaps more noteworthy to look at the fairly jury-out story on the actual buy, sell or hold. The consensus seems to be around neutral. There's a lot just to sit and watch now. What specifically are you eyeing?
Yeah, so there were definitely some positives in the Tabcorp result. I think they showed good growth from the Keno, which had a bit of a rebranding and some marketing money thrown at it. I think it now accounts for about 12% of their business. Their digital gaming showed some growth. So there are some positives there that the market can grab onto. It's interesting you talk about the broker recommendations. I performed exactly the same analysis as you, Carson. I think Macquarie and Morgan Stanley put a buyout on it today, but most of the other brokers were neutral or indeed slapped sell ratings on it. And from where I was coming from, you know, it has been range bound over the last 12 months between about $4 and $5. And I was of the thinking that a couple of those things would really have to go well, like the Intech integration, further growth in the digital gaming in particular, for the stock to break above $5. But here we are talking about it right now, and it's punched through that $5 level. So maybe it's onwards and upwards.
Yeah, well, is that the case for Suncorp? Beaming Michael Cameron, you know, who would have thought, you know, he cast aside the REITs, you know, oversee on GPT. He was on the board of Suncorp and really in many ways was the natural best fit to take the helm, which he has. You know, the shares have been at an 8-month high. Is this sustainable, or you worry that it's a cyclical minefield?
Look, it's a really good question. I'll just, you know, pivot back to the results. I think the results were as good as they possibly could have been. The things that they can control, they did control well. Their net interest margins improved in their banking division. Their life insurance division showed growth. The thing that hurt, of course, was general insurance and the natural disasters. Now, how do you predict or control natural disasters? Do you employ better actuaries? Do you employ better weather forecasters? I don't know what the answer to that question is. But like I said, it seemed like everything that they could control, they did control. So if they get some luck and there's a few less natural disasters and less general insurance claims, potentially it can be sustainable. But in terms of a risk, that's not really a risk that I would be willing to take, especially given where the share price is. It's quite lofty, as you say, near 12-month highs.
Yeah, now he's been at pains, Michael Cameron, to say, unlike the NAB and the life insurance sale, we will not be going down a similar path. Instead, we can perhaps tweak this to get better performance. Is he likely to be vindicated, or you think wiser heads have prevailed with the sell side up? He'd be foolish not to follow suit.
Look, I think it will be a struggle. I mean, what are they shooting for margins in their general insurance? I think it's 12%. They missed this time. Again, you know, it's all going to depend on what these weather events do. I think that's ambitious to say that there's further upside.
Yeah, I think it's a 12% target for medium term. I think they came in at just on 11%, didn't they? In the second, so yeah, right. But yeah, they are pushing towards that figure. Downer, so often a byword for down days on the stock. There was Waratah, there was that headache that seemed to roll off the tracks, off the trunk line. What are we now saying this is all down to the turnaround? What's been the catalyst?
Well, I think the transition away from volatile mining services and into public infrastructure is a good thing. It now accounts for 55% of their revenue stream. The thing that worries me about all of these infrastructure or mining services related businesses is that it's all about winning contracts. If you win a contract, great, then you know it's all gravy. If you don't win these contracts, like they didn't win with the Canberra Light Rail, well, it hurts very badly. But the other element to all of that is because it is such a competitive space and you've got all these competitors undercutting each other and putting in these low bids, well, even when they do finally win one and they try and deliver on the project, you get the cost blowouts like we saw with the Waratah project, which blew out 120 million. So it's pick your poison, and it's, again, probably a risk that I wouldn't want to take. That takes nothing away from the fact that Downer has done a particularly good job in managing the last 6 months, and their results reflect that. And given the negative sentiment towards the entire sector, I think that's why we saw the circa 10% pop up on the open yesterday, and it followed through today. So you know, it's that re-rating and upgrades based on the latest numbers. It might have a little bit further to run, but like I said, the risks for me, I don't think they're worth taking.
Yeah, I was going to ask you, to your mind, who has got that formula right, down pat? Because it often was a critique levelled Leighton's way as well in another life. Now, of course, CIMIC, that they just had wafer-thin margins, the slightest deviation, the slightest delay, it was pretty much, you know, game over.
Yeah, well, I don't think any company ever gets it 100% right, and I guess it comes down to the experience of the management and foregoing those projects that they know they can't turn a dollar on. You know, but then they've got to keep cash coming through the door, so maybe sometimes they have to bid on these projects. But I think it would come down to the discipline of the board and the people making decisions to say, well, if some other company wants to bid 20% lower than what we're going to bid, let them have it, because we know we can't deliver the project at that price. And that's the thing that really hurts the share prices, when they come out with these cost blowouts and the share price gets completely blown up. You know, I think they're the things that these companies need to avoid. But in terms of a company that's got 100% right, I don't think there is one.
One prediction and a brief in one sentence, JB versus Cochlear. What would you be rather adding to as far as a position leading into results next week? Which of the two?
Is neither an option?
Well, that's telling.
You're making me choose one or the other. Probably Cochlear, although JBH, if they can get the good guys at a reasonable price, which probably isn't likely, to be perfectly honest. Even the ACCC might prevent that from going through, even if they did lob a successful bid due to the concentration in the market. So, yeah, JBH, if they managed to get the good guys at a good price, but otherwise probably Cochlear, although in terms of their product innovation cycle, you know, they're at a low point and the stock price is at all-time highs, and PE's sort of the highest it's been in, well, over the last 10 years. So how much further does it have to go? That's the question I'd be asking.
Yep. Drive down the road and look in their labs. They're working feverishly, I'm sure. Thank you, Chris. All the best.
No doubt. Thanks, Carson.
Chris Conway from the Australian Stock Report.